Welcome back, friends. This is my second session on stock market for beginners. I'll be talking on performance and strategies of the stock market. Potential outlook of stock market. Indian stock market looks impressive and promising and has a growth potential than any other markets of the world. Driven by GDP and foreign investments pouring in, it is estimated at a rate of 11.3% a year for coming years. Also, the increase in stock market aspirants will pave the way for bright future for investing. Data on historical returns also suggests that investing in markets gives the best returns than any other form. For instance, Nifty has a CAGR of 11.1% in the last 20 years. Over the last 40 years, the Sensex has given a CAGR of over 17%, which is the highest return given by any asset class in India. The BSE barometer has come a long way with a compounded annual growth rate of over 17%. The equity gauge remains by far the most promising asset in India. Put another way, the Sensex has risen a mind-numbing 390 times during these 40 years. That's the power of compounding. Potential outlook of stock market. India has emerged as the best performing equity market in the world 3 months after the sharpest sell-off in history. The benchmark Nifty 50 has gained 35.2% in the past 3 months, the best among the top global indices, according to the data from Bloomberg. India's total market capitalization rose by $530 billion to $1.8 trillion in the past 3 months. The indices in other major markets including the US, Japan, Germany and France rose by 28%, 25%, 29% and 18% during the period. Here you can see India is way ahead of all these countries. India's market capitalization stands at BSE $2 trillion, whereas NSE it is at $2.3 trillion. Sensex performance over 5 years. Here we can see the plot from 2015 to 2020. It was at 28,415 in 2015. Now it is at 38,139. The performance of the Sensex can be seen over a period of 5 years. It has made a high of 41,895 in this year 2020. In spite of the pandemic, it has given a very good returns at CAGR of 6.84%. And you can see in the graph that Sensex made a high of 41,895 and due to the pandemic it suddenly collapsed to 26,000 levels within a short span of 2 to 3 months. That's the risk involved in the stock market. Whereas you can see that it has risen sharply within a short span of 4 to 5 months from 26,000 levels to 38,139 levels. Goals and analytics of investing. Goals of investing should be conservative, considering the risk factors involved in the market. Strategic planning and intelligent investing will assure you of decent to very good results. One should keep a goal of returns better than what bank deposits, recurring deposits, mutual funds, EPF, NPS or other depository bonds offer you in the current market scenario. For example, bank FD is around 6 to 6.25%. Bonds yield you 8 to 10% or even more. Mutual funds yield will be around 12 to 15%. Considering the above, it is better to keep a target of around 15 to 20%, which is a decent target to be a successful investor. For a breakup on goals and analytics of investment, one can consider the table Analytics of Investment Conservative Returns. Here, for investment amount of rupees 10,000 with the annual desired returns of around 15%, your monthly target would be mere 125 rupees and the total earnings per annum will be 1500 rupees. And for an investment amount of rupees 1 lakh with a desired target of 25% per annum, your monthly target will be 2083. And likewise, total earnings per annum will be 25,000. Strategy for conservative returns allows you to mitigate the possible risk involved in the stock market and also how one can create a greater wealth over a longer period of time, which I am going to explain in the next few slides. Now let us analyze how one can create a greater wealth by way of power of compounding. Patience is the key to success. As an investor, one has to be aware of the power of compounding, which in long run will create greater wealth. Many investors will be concentrating on the instant wealth creation and will be more emotional in investment, which accordingly will result in loss making. Refer the table below for investment returns with regular and consistent performance. The returns have a multi-fold increase as compared to any other returns in deposit schemes, mutual funds. Let us consider an investment of rupees 10,000 is made in the year 2020 with a consistent performance of rupees 20% per annum. Your returns in 5 years will be 24,883, which is 2.5 times the initial investment. Likewise, returns in 10 years at the rate of 20% per annum will be 61,917, which is 6 times the investment capital. Strategies of investment. As a beginner, one has to be firm on the trading strategies. It may be intraday or delivery. Before investing, take some time for studying about the companies and their performance over the years. It is better to shortlist few companies of your interest based on the segment they operate. Choose a segment based on the data science for the guaranteed returns. Refer table below for top 5 sectors in 2020. Footwear has done a tremendous growth with 52.97, software and IT 42.71, oil and gas 38.54, FMCG 20.49, healthcare 16.93. Likewise, you can shortlist few of the sectors of your interest based on the data science for you to enable select the right stock and make the right decision. For beginners, I would suggest to start with the delivery trading, where you will have the opportunity to learn the behavior of the stock over a period of time. As you spend more time in studying about the stock, you can analyze yourself as to what causes the movement of the stock to go up and down. Intraday trading is very risky and requires a lot of study to make decent profits. There will be a chance of wiping off your major working capital in a single session. It is better to start intraday only when you feel you are grounded with a delivery trading strategy. BTST is a buy today and sell tomorrow strategy. It is a margin trading where you buy on day 1 and have to sell within the end of day 5. If your target is achieved, you can sell on any day, that is day 2, 3 and 4. There is also an option to convert BTST to cash if you have the required margin in your trading account. Capital requirement. This is a big question for a beginner. What is the capital requirement? There is a saying that a person who can make money with 100 rupees can make money with any amount. It is better to start with a small capital till you understand the market. The logic is to make a positive move with a positive result. In case if you fail, it will be a learning curve which you can carry forward in future. It is always good to make your own strategy in investing. Make use of data science techniques in selection of stocks. Lot of factual analysis reports get published in the internet today. There are a lot of technical analysis tools available in the trading platform also, which can be made use for making your decisions. This requires a lot of homework but can be effective for you to be Atmanirbhar in stock market. Avoid suggestions and predictions from unknown sources. Stock pundits and most importantly, call-based inputs on subscription. Even if you want to make use of it, you have to analyze yourself and proceed further. In this way, you can be Atmanirbhar. I will be making more useful videos on technical analysis tools which will help you to predict the movement of the stocks. Capital requirement for beginners. Beginners can easily start trading with the initial capital of 10 to 20k. Investment should be done in a staggered way instead of making it in one shot. For example, if a stock bought at 50 rupees of 100 quantity, it will cost you 5000 rupees. And if the stock falls continuously, you'll be a mere spectator watching and waiting for it to cross your break-even price of rupees 50. This may take a lot of waiting and frustrate you to book losses, since the other stocks are making profit and you want to invest there. This is a usual scenario with beginners. Consider investing in a staggered way, such as in 3 to 4 times with 25 to 30 stocks per time. Let there be a 5% difference each time you add the stock. That is, if you add at 50, next time you buy at 47.5, 45, 42.5 and rupees 40. This is called averaging. Any good stock in normal scenario will have a decent correction of 10 to 15%. This way, you are assured the break-even is achieved in a shorter duration and can make a decent profits. Now we come to the conclusion. Smarter trading is the way to success in stock market. Making strategy and sticking to it will yield better results. Patience is the essence of the success. One tends to lose patience with the market scenarios and could act emotionally, which loosens your grip on the market. Technical trading is the way to success. It is beneficial to be equipped with some technical tools to analyze the scenario and make positive moves. I'll be making more sessions on the technical tools in the future. The views and suggestions in this content are based on my learnings and experience in stock market for more than 10 years. I hope that these sessions will help beginners to make use of my inputs and learn to be a better investor. Most importantly, Atmanirbhar. Thank you.